Institutional buyers are flooding into these three names. Now is the time for retail to really pay attention. Joining us today is a new guest. We have Andrew Keene from AlphaShark.com. Andrew, thank you so much for being here today. I know that institutional flows are your favorite thing to follow, and this list today is really interesting. I think it's one that our viewers are going to like all three of the names that you have to offer, so I can't wait to get into those names. First, I want you to talk a little bit about your strategy and why you are always looking at institutional flows.
I'm a trader, through and through, thick and thin. I trade all derivatives, so all options. To be honest, 95% of my trading is just long calls. The market goes up 85% of the time, so I'm mostly just long calls, not too much of complex order strategies. I was trading on the trading floor at the Chicago Board Options Exchange in 2001. I've been trading now for 25 years, and I had a very successful career down there trading order flow in the option market. So what I'm watching for is huge, massive bets in the derivative space. We never know a trader's stock position or their option position. They don't label it as this is speculation or this is a hedge against a basket of stocks, but we can surmise from other things. I watch this throughout the course of the day. I've been doing it for 25 years. And, people have the opportunity to watch with me live. We also do a trade alert service. And I'm not really a day trader, to be honest. I'm more like a swing trader. Average hold periods are about 2 to 10 days. Options are a derivative of stock. So you only need a stock to move, a couple dollars sometimes to get a potential of like 50% or 100% profits in options.
Yeah, you're an options person for sure. But I also think the principles that you're looking at apply to people who like to buy and hold, whether that's holding for a few months or a few years. Talk about how that can help those kinds of investors to look at what the institutional buyers are doing right now.
It's fascinating how you look at it. There's about 8,700 publicly traded companies. There's 4,200 companies that have options in them. So not all the companies have options. And then throughout the course of the day, there's so many trades that hit the tape. And basically simple and easy, there's volume, which are how many options trade today. And there's open interest to how many exist before today. So all we're looking for is big blocks of calls being bought in the option space on a certain stock, certain expiration, and then basically I mimic their positions. And most of my trades are less than $100. An option that costs 80 cents, you controls 100 shares of stock, is $80 to get in that trade. Not every trade is going to work. There's trades, believe it or not, I say it, they're trades that do lose money. But we have three, really good candidates today that I like. I like to trade more volatile stocks, especially in the option market. If you're trading a stock that only moves like 20 cents a day, that option's not going to move. But when you have a company that we'll talk about the three companies I have with bigger ATRs, they can move very quickly, very fast on any specific news.
And we're going to talk about the timeline for all three of these. Again, looking at it from an option strategy, but also for just someone who wants to buy the stocks right now and hold until they might reach their peaks again. You absolutely are right. All three of these names are very volatile. A couple of them, some of our viewers are probably familiar with. One, maybe not so familiar with, but they're definitely in that pre-revenue, early stage companies with a lot of interest that kind of ebbs and flows. Those seem to be great stocks for traders and anybody who's into options, but are they also good stocks for the average retail investor who isn't ready to get into options or trading yet to also be looking at some of these names?
So right now, I think it's an opportunity and a risk versus reward setup to look at the names that I'm looking at. And like I said, it's possible that they do go down more, but also in the option market, I have a very long time frame. Expirations I'm looking at is October, December, and January. As a trader, like January may seem very close on somebody's radar, but for me, like January is so far away. If we have any news whatsoever in this space, things could take off. And then once again, an option is the right to buy stock. So these options will move a lot faster than the stock will as a percentage.
Yeah, it's a different way of approaching it, but no matter how you approach investing or the market, these three names are really interesting to look at right now, and I can't wait to dive into them. You can tell Andrew is very well versed on so many different stocks in the market. He's live every Monday through Thursday from 9:30 to 10:15 Eastern, live trading with all of his own subscribers. He also has a program where he's sending out text alerts for anyone interested in options and learning more about Andrew's strategy. This is a great program. You can get a special offer for your first month to sign up and learn how to do options and trading with Andrew by following the QR code on your screen or the link in the description. Again, Andrew, thank you so much for coming on and sharing some of your experience with our viewers. Let's get into that first stock that you are looking at today.
Okay, so the first stock, we'll go by expirations too, is XE Energy. And this one recently just IPO'd. Literally, we talk about these IPO dates. And this stock was trading $37 on the third trading day. In the world of IPOs, we see a lot of them going down after the IPO. And the stock has gone now from $37 to $13. So it has lost two-thirds of its value. They're a nuclear SMR fuel company. They're backed by Amazon. They IPO'd in April. They are pre-revenue. So, you think about it as a valuation. This isn't what I was looking for. But we actually saw an institutional trader buy some upside calls in October. So the specific strike that I'm looking up here is the October 16th, 2026. That is the day they expire, the 35 calls. This option was initially bought by an institution for $1.70, so $170 per one lot. And that option is now down to $25, which is unbelievable here. So once again, we never know if the institution's buying calls and then they're selling the short stock against it. But I just looked at it as an opportunity. I bought some more today. One of the things I look at is the RSI. RSI has now gotten under 30, which means it is oversold. The ATR, which is the average true range, how much it moves on a daily basis, is around $1.70. The higher the ATR, the more it'll move on a daily basis. So it has a potential to bottom. Today, it did hit a 52-week low around 1320, has come back. But now I can get into that trade today. I have the right but not obligation to buy 100 shares of XE between now and October expiration on the 35 strike for only about $25 per one lot.
Now, let's talk about a little bit more about the company. SMR type companies have had a really rough few months. We've had several different people on talking about this dip in the whole nuclear sector. And it's interesting that this company IPO'd and did so well in the first few days during a time that the rest of the market for small modular reactors was actually down pretty low. What's your take on that? Is that maybe impacting some of the downward action here? It's a part of a sector that is also seeing a lot of downward action.
There could be shifts out of these modular companies, but all it's going to take is one, two, three spikes. And like I said, for a trader, I have basically 3 months on this trade for it to work out. And for me to get in at $25 per one lot, I think it's just an unbelievable reward array setup. I don't need the stock to get back to 35. Okay. But if the stock can go back, down 8% today, if it goes up, it moves $1.75 a day. If it goes up 3 days in a row, that option will probably triple in value.
Okay, so this one in particular is so interesting, Andrew, because it is hitting that new 52-week low. The conversation about how the nuclear sector is doing is also interesting. But I'm curious for you, are you caring about the fundamentals of this company? Did you, do a ton of research on this name before you invested? Or is that not something you pay attention to in the options market?
So to be completely honest, in the option market, I do not look at what the company does ever. I've traded probably half the stocks that have options in the whole derivative space. But a lot of times for me, it doesn't matter because all I'm looking for is institutional order flow. We think about it and you think about, do insiders trade on, non-public information? Are people trading on insider trading? I know my personal answer for it. You can kind of guess what your personal answer is, but I'm looking for these institutions that are buying big blocks of calls. And then, I'm just follow them in there because when I was on the trading floor for 10 years, we had a trader that came in as a Merrill Lynch broker and they sold put spreads in Apple. Doesn't matter what they did. They were getting long Apple through the option market. Then I followed this exact trader for 2 straight years and I made a lot of money doing it. I've been trading now for 25 years. I have traded everything possible. For me, this is the simplest, easiest way. I call it the KISS system. Keep it simple. Just follow what the institutions buy in the derivative space and you piggyback their trade with that. Okay. And, these trades we're looking at are anywhere between $50,000 and a $5 million bet. Someone's probably not going to put on a $2 million bet in the derivative space unless they know something. So this is what I'm watching for in the option market.
So let's look at how big of a bet you saw on this stock in particular.
So they bought about 2,500 calls, and this was a couple weeks ago at $1.70. This option has gone down in value. And the institution, number one, they're not always going to be right. Just because they make a big bet, they're not always right. They're usually right more than they are wrong. And also, they don't care what the initial option does over the course of a couple days. They just care in the long run, are they going to make option money on the trade? So this is about a $400,000 bet in XE, which is a pretty big, substantial bet. And like I said, today, the stock was down 8%. It was an opportunity for me to add to my position. When I buy an option for $25, it can only go to zero. If I bought this stock 100 shares of stock, it's going to cost me $1,300. That option is only going to cost me $25. So I prefer trading options. Obviously, you could trade the stock. Like if I wanted to trade the stock today, it did bounce back about 4% from the lows. I buy stock on the close. I'd probably have a 1250 stop loss, and then I would just let it run to the upside. So that's how a trader could trade it if they wanted to just trade stock.
Very helpful for our viewers, gives you a couple of different ways to approach this name, and also just good to bring it to our attention that there are some institutional people who are betting on this stock going higher over the next few months. And I think that's something to pay attention to, which is why I'm glad we have you on the show today, Andrew. Let's get on to that second stock that you are looking at.
The second stock is Oklo, OKLO. Once again, another one of these pre-revenue names, small modular company, AI data centers. I'm sure you've heard it on the MarketBeat channel, and everybody's talking about the AI data centers. And then once again, this is one of these names that has gotten absolutely crushed from the highs. It traded up to $194. And today it traded down to $41. Okay. And once again, what we saw, and this trade happened a couple days ago, they were buying upside calls in December. So they were buying the December 18th, 2026. They were buying the 90 calls. Okay. About 50,000 of those trades. So that's the ripened obligation to control 5 million shares of stock. I watch this option. So like a lot of times when it hits the tape, I don't necessarily get in. These got bought about 2 or 3 days ago for $3.40 per one lot. One contract is going to cost $340. And today I got in for $230. So basically I have the ripened obligation to buy Oklo, and the option is going to move with stock. So stock moves up, I'll make money. Stock moves down, the option will lose money. But once again, I look at how many days until this option expires. It's 155 days. So I'm spending $230 for 155 days. If I think about it, it's not really going to cost me that much. Once again, I go to look at that RSI, which is our relative strength index, to under 30. So this stock is completely oversold. It has a big movement. Today it moved $4. Its ATR, it's how much it moves every day, is at $4 as well. So all I need this stock to do is pop probably 2 days in a row in the next couple months, and these will go up 50% in profit.
Yeah, this is a good name for movement. We know from following this on the channel that Oklo definitely moves quite a bit, and it's been a great name for investors, and then it's been a terrible name for investors, especially those who got in when the stock was on a huge run up. So it's no surprise to me that people who are in the options market are also following this name. I do think that that seems like a really fairly significant institutional options trade on a name like this. Is that typical, especially for a stock that's the size of Oklo and also still a very much a pre-revenue company?
Yeah, I mean that's a very large bet in the derivative space, a 50,000 lot contract. So today was when I initiated my position in Oklo. So I didn't get in, when they bought it, but that was on my radar. And it's so funny that some days stocks move exactly their ATR. And today the stock was down $4. The average true range is $4. So I'm like, okay, here's an opportunity for me to get in. And I've been trading for so long. And like I said, people can come and watch me trade live. I do trade about a $200,000 account with Thinkorswim. So I'm a pretty big trader. And today was an opportunity for giving me. If Oklo goes lower, I'll be honest, I'm going to add to this position. And I'll probably add a third time too. So this is kind of like a starter position today. If I make profits, the stock reverses and goes up, I'll take my profits off. But if it goes down as a trader, I don't mind getting more into this position because, like I said, these expire in December. One contract was $230. It's not a lot of money. If Oklo goes to zero tomorrow, I lost $230 per contract.
I think that's why so many people really do like options, because the risk in dollar value anyway is quite a bit lower, even though there is, of course, still plenty of risk in the market. I know you mentioned your trading program again. I just wanted to give people a chance. If you do want to learn more about options, Andrew is clearly a very good teacher who's been doing this for a long time. You can scan the QR code or go to that link in the description to get more from his program now. Andrew, we have one more stock to talk about, and you have been so good at explaining the process of options. I really liked it talking about when you're selling something. I think that's helpful for people who have not really explored this before. So let's get on to that third name. The first two have been in energy, and this is another name that a lot of our viewers are going to be familiar with because it's one of those high growth, high risk stocks that we have talked about a few times on the show.
Yeah, so the last one is another one that, like you said, I do trade live. I try to simplify options. I know for some people, they're like, it's so complex, it's so hard, but it's really, really simple. It's where I get into an option and then where I get out of it, right? And when I buy a call option, I don't look at any of the Greeks. I don't look at charts. I don't look at a MACD. I don't look at a moving average. It's actually the easiest trading. It might seem the hardest, but it's the easiest trading, and people have an opportunity to come in to watch me trade opening bell. I've been trading it for subscribers for over 15 years now, and I love it. So it's, opening bell 9:30 to 10:15, 4 days a week. So the last one is IONQ. And this is a very popular one. And this is quantum computing. A couple months ago, when these stocks were absolutely on fire, actually about the end of November last year, the stock got up to $84, and everybody got on their high horse about quantum. We talk about these trends and these shifts. Once again, same thing, valuations, right? So this is one that only has about guidance of $260 million, and it's off the highs. So this stock has gone from 86 to 35. The recent lows is 26. This is one that I actually might buy in my personal account for stock for the future, because I do believe in quantum computing so much. So I saw a couple days ago they were buying some calls in January. And then today, another trader came in and bought some calls in November. This was about a $1.5 million bet, and they were buying the November 60 calls. All we need to know is that some trader somewhere in the world, we don't know their stock or option position, we don't know if they're hedging or speculating, took a $1.5 million bet in the derivative space that IONQ is going to move higher between now and November. So I am in this position. I'm looking to buy more of this position. Once again, we look today, RSI 26. This stock is oversold. Just because the stock is oversold doesn't mean it can't get oversold more and more, but it is oversold in the short term. And once again, I look at that average true range. I like stocks that move a lot. Like on my radar, I have a stock that is EOSE that moves 59 cents a day. And then I have a stock like this one that moves $4 a day. That's a big move. On a $35 stock that moves $4 a day, I only need a day or two when this one can reverse. I'm buying options out till November. I also buying options out to January as a trader, long term, it's a long time away. So if you look at the three names I bought today, XE October calls, Oklo December calls, and then IONQ January calls. We can come visit on the show, in a month or two, and I'll talk about, did I make money or not? Thankfully, this year we do run 11 portfolios. They're all up year to date. But, who knows? Maybe these trades won't work out. And, that's the thing about trading. You put on a trade because you think you're going to make money. Not every trade's going to make money. It just happens, right? But I think today, I didn't buy these positions a couple days ago. I bought all three of these today. I think today represents a great opportunity as the market's down. AI is getting hit today. Semiconductors are getting hit. Anything pre-revenue is getting hit. Modular companies getting hit. Who knows what happens in the next a couple of days? There could be rotation out of something else into something else. Maybe Warsh comes out and says he's not going to raise interest rates. Nobody can predict the market or what's going to happen.
Yeah, that's for sure. There's no crystal balls out there who can say exactly what's going to happen down the road on the market. I want to ask a little follow-up on IonQ before we wrap up today. And is this the only quantum stock that you are seeing this kind of institutional inflows to? Are there other names in quantum? I know we talk about quantum computing stocks all the time. I love that you shared that you are very bullish on this sector more long-term for your regular, investing portfolio. Do you think that there's other names that investors could be looking at in the quantum space, or is this one stand out simply because of those institutional flows?
I personally, like I said, I like ones that have bigger ranges. So like the three big ones that I look at is IONQ, RGTI, and QBTS. Like if you wanted to create a basket of quantum computing names, you would get those. I might be looking for stuff in RGTI. Once again, that one's gone down from 58 to $14. And some retail traders were buying at 58. I'll tell you that. I don't know who they were. They weren't me. But, now that they've gotten crushed so much, if there's, institutional order flow, I will. And also like I have like a pattern or routine of stocks that I've traded before. So I know I've made money in Oklo this year, OKLO, and I've actually taken INOQ and I've made money before in that one. I remember I had a position in INOQ. I sold it. I made a lot good money. And then it just kept going up and up and up. And I was like, why did I sell it so soon? I was so mad at myself. So I like to take stocks that I've traded and made money before in the past. I've never traded XE before because obviously it's a recent IPO, but Oklo and IONQ, I do feel comfortable with my positions here.
Andrew, thank you so much for diving into these three stocks today and giving us an options view of how people can look at investing in these names, really helping to grow their investing journey. If you want to learn a little bit more about how to do options or trade, here's one of those most recent interviews here talking about his strategy for trading options too. You can watch that full interview with Jeff Clark here.